All right, Bulls and Bears, BX4, Bull to the bust, back in the building, back with another dose. Ride the bull, prepare for the bear. Let's go ahead and get right into it, folks. We got a lot of economic news, data to get caught up on. We've got to talk about housing today, the housing bubble. We've got to talk about the huge plunge in consumer confidence. We know it was just a matter of time. And they tried to mask this whole thing, saying that the economy is doing wonderfully. It's doing wonderfully for a certain group, and it's mostly the top 10% who own most of the stocks. In fact, if you look at the top 10%, they own about 90% of all stocks, folks. So when they say the markets are doing good and they try to correlate that with the economy, yes, maybe for the top 10%. There are some people doing well in the markets. The question is, if it's your retirement account that's up, is it really even your money? You're going to be penalized. You have to pay Uncle Sam a big penalty for taking out your money, in quotation marks, your money. So if you have to pay a big penalty on it, is it really your money? If you stop paying property taxes and they can take your home, is it your home, right? We have to start thinking like this, start asking these questions, right? So question this. And let's talk about this, though. The big plunge in consumer confidence. We know the powers that be, the money printers, the ones that control the money, they're out there trying to convince everyone that things are getting better, right? Costs are coming down when they're really not. Inflation slowed down, which means prices are going up, just not as fast as they were. Take a look at this here. Consumer confidence sees the largest decline in more than 3 years. Folks, they try to keep the lid on this. People believed the official numbers, which were way off, even the inflation number, way off. You've got to add about 8 to 10% to that annual inflation number that's put out there. People believed the jobs numbers. It came out that, what was it, over 800,000 jobs that they said were added were actually not added. It was revised. If you look back at the previous months, they typically revised it. I believe it was the last 11 out of 12 months they revised it the following month. So why not just wait one extra month to get the real numbers before reporting them, right? The whole thing, it's a scam, folks. Largest decline in 3 years. Consumer confidence tumbled in September, is a headline here, as Americans grew increasingly worried about a cooling labor market. That's how they put it over there at Yahoo Finance. The latest index reading from the conference board was 98.7, below the 105.6 seen in August. And guess what? I think this consumer confidence survey or index is also way off, right? I don't believe most of these numbers. I think you have to add a lot to the numbers to get accurate numbers. So if they say it's 98.7, I'm going to guess it's about 85. That's just my guess, the real numbers here. But who knows? It could be an accurate survey or index. But the fact is, if you compare this one to the previous one, using the same type of metrics or the same data, the same type of reporting, it's the lowest in 3 years, the biggest decline in 3 years, rather. So think about that, folks. I mean, most people barely scraping by. Got retirees going back to work now like never before. Let's jump into the housing market. A big part of these retirees going back to work is the housing, not just the housing market, the cost of carrying a home. When you look at the cost of materials now for a new roof, my sister paid, she got several quotes. The lowest one was close to $15,000, but between $15,000 and $17,000 for like a 1,300 square foot home. But let's talk about the housing bubble, home prices. We're being told that home prices ticked up again to another all-time high. Well, let's talk about the reporting mechanisms here. First of all, Case-Shiller just looks at 20 cities. Home prices gains reach another all-time high, the Case-Shiller Home Price Index. We also have Realtor.com. Let's see what they're talking about. What are they saying? Home prices continue to hit new all-time highs in July, Realtor.com. They go on to quote the Case-Shiller Index. Now, investors buy homes in these larger cities at a larger pace or faster pace than the surrounding cities and the rest of the country. So the 20 cities are seeing home prices stay pretty stable. If you look at the coast, we have San Francisco down year over year. I believe Seattle, some others. But take a look at this. This is the Fed's home price index. I've showed this before. But we have this recent news out here on these the Case-Shiller one. I wanted to bring this up here. Let me bring up a big chart here. So look to the far, all the way to the right edge here. Zoom in. And what do we see? We see that it's actually down year over year. And this is the Fed saying this. Second quarter 2023, about 418,000. Second quarter this year, 412,000. So we're down year over year nationally, not just counting the 20 cities like the Case-Shiller index, altogether nationally. All right, so think about that. And think about the fact that right now we've got more things, more programs, more ways that they're keeping the housing market or attempting to keep the housing market propped up more today than we did before the housing bubble went bust in 2008. Right? The loans are different. We don't have the liar loans. The adjustable rate mortgages are not as much. We don't have the interest-only loans like we did back then. But it's worse now. In fact, if you look at all the down payment assistance programs, it's way more today than it was back then. In fact, it's more than double. It's more than even triple. I'd have to get the number and get back with everybody on that. But every state, folks, down payment assistance programs. We've got a candidate out there, Ms. Harris, talking about now a nationwide down payment assistance program, saying that's going to be the solution for housing affordability. So more handouts to help people buy unaffordable things in homes. She's saying that's the solution. Is that going to be a solution? It'll get a few people into a home, sure. But can these people sustain the home, right? Speaking of sustaining the home, look at this. We've got news just out here. CNBC is reporting this and some others. Bring it up here for you. Just so you know I'm not making this up here, folks. Mortgage refinance boom takes hold as weekly demand surges 20%. So we've got the fixed mortgage rate now down to about 6.13. Of course, it could change by the time I'm reporting this, from the time the article came out. But the drop from 7-something to 6-something percent has the refinancing surging. Why do you think these people are doing this? Even homeowners are crunched. I can tell you I'm one of them. Somebody asked me down in the comments, if you're so smart, how come you're not a millionaire? Well, if I took my home equity, if you count that, I am. Do I feel like a millionaire? No. I have kids. I have expenses. I can't sell my home and move because I've got kids in school. I've got relatives I take care of here in California. I've explained it a few times. I'm kind of stuck here in California for many reasons. Elderly relatives, kids in school, jobs, businesses. You can't just get up and move. If you're a single person with no tie downs, of course, get up and move, go to someplace cheaper. So even though, on paper, if you count up all my assets and everything, you could say I'm a millionaire. Definitely don't feel like a millionaire. And when they say people are millionaires, it's usually just on paper. Like when you look at their stock portfolios. But keep in mind, they have to sell those things. They have to sell the stock. They have to sell the home to actually be a tangible millionaire. But even then, it's just digits on a screen. I mean, we want to get to the big picture of things here. All right, but let's move on. There's a couple other things here I want to touch on. I've got them all pulled up here. More layoffs. Paramount initiates next round of layoffs, ongoing effort to cut 15% of its global workforce, folks. These are not 1-2% of their staff, 15%. These are big, big layoffs. Folks, we've got Treasury Secretary out there again, Janet Yellen. I can't stand her. She is just saying so many things that are just completely ridiculous. But yet, she gets all the press. She gets all the media. Yellen issued a stark warning about the economy and delivered a veiled endorsement here. Let me give you a couple quotes here. She wrote an op-ed in the Wall Street Journal. Quote, risks remain, but the idea, let me start again here. Risks remain, but the data suggests that we're on the path for a soft landing, folks. Let me just stop right there. It's just the opposite, unquote. Folks, we're on pace for a crisis, a cost of living crisis like we've never seen before with the amount of debt that U.S. consumers have right now. There's a reason people are rushing to refinance their mortgages. Risks remain. She wrote this here. She continued, veering off course could jeopardize our economic trajectory. Let's stop again right there. Trajectory of what? The savings rate that's plunged now to I have to correct myself. Few reports ago, I said that the savings rate, the U.S. good savings rate, the amount of money people have left over at the end of the month after paying all their bills and expenses, savings rate for U.S. consumers, U.S. households, I said it was an all-time low. It's actually not at an all-time low, but it's close. But the fact that it's sinking every month, and she's talking about the trajectory that we need to stay on is this soft landing. Folks, it's insane that the Treasury Secretary is out there saying things that are just the opposite of what's actually happening, what the opposite of reality. It's no economic reality in what she's saying. And yet we're told that there's this big campaign out there, this fight against disinformation and misinfo, or whatever they call it. But we've got people in very high positions of power, people that control the money, people that make the major decisions. Remember, it was Yellen, the FDIC, the Treasury, all got together and bailed out the billionaires that would have lost a lot of money in those bank failures in 2023, namely Silicon Valley Bank, where you had a lot of big tech industry money, tech industry would have lost billions of dollars, but they overrode the FDIC limit, which was up until last year, it was $250,000. They're still saying it's $250,000, but if you look at all the people that got their money back after the bank failed, it was billions for some people, right? You've got people out there in that type of position, Miss Yellen and others, with that type of power to make these types of decisions, to create endless amounts of money out of thin air. People out there saying, at that position, people at those levels saying just the opposite of what's true. Folks, what is this going to end up looking like? This is just, it gets beyond insane. I almost can't believe some of the things that are being said out there. We were told inflation was temporary. We knew here from day one it wasn't, because we saw the underlying issue was the money creation, the rescue programs. Back to the housing market. We talked about it a few minutes ago. The housing bust. We had over 7 million people get mortgage assistance in 2020, right, with the health crisis. Folks, it only took 3 million people, 3 million households back in the 2008 housing bust to bring the housing market down. So when you look at the numbers, the number of people that needed mortgage assistance here in just 2020, the housing bust would have been twice as bad in 2020 versus 2008. Twice as many foreclosures, over twice as many, right? So in 2008, 2009, 10, we saw some cities with 40, 50% price declines. If things would have played out in 2020 more organically, where people didn't get a freeze on their mortgages, and I'm not saying they shouldn't have did it because people would have lost their homes, but if you look at not having that rescue program in there, would we have seen double the price declines versus what we saw in the 2008 housing crisis? Instead of 40% declines, would it have been 60, 70, 80%? Right? Nobody knows because they didn't let it happen. But that's my point, right? They're doing more and more to keep the bubbles inflated, to keep prices propped up, because what is that? That's the illusion of economic growth when you have high price levels. And also you pay higher taxes for everything. When the cost of living is higher, when something costs more, you're paying higher taxes, whether it's at the grocery store, because taxes are what? A percentage of the value, or a percentage of what you pay. So higher prices help the powers that be in a number of ways, but nobody's talking about it. Nobody connects the dots or puts two and two together on that. I guess I'm the only one talking about it, just like I'm probably the only one that said home prices weren't going to come down. You think they want people getting into homes at ultra cheap levels? Do you think they want that? Or do you think they want prices to be high, so you're stuck paying high taxes, right? So the corporate landlords can charge higher rents because people can't afford a home, so now they're forced into renting. So now they can raise the rents as much as they want, and they're putting in laws to try to cap that. That's not going to help the problem, and that's not going to fix the problem. It's probably just going to make things worse here, folks. Wish I had better news for you here. Wolf Street, job losses pile up at tech and social media companies in San Francisco and Silicon Valley after reckless hiring frenzy. And let's talk about frenzies. It was a hiring frenzy, especially in 2020. People were taking out 30-year mortgages based on what they were making at that time, right? But it was a hiring frenzy. Now these people are losing their jobs. How many of these people went out and bought their homes, right? Of course, they're still keeping the housing market propped up, but how many desperate paycheck to paycheck homeowners are out there right now regretting, that they bought a home. So we'll see how this plays out. We've got October right around the corner. A lot of big things but the term I've been using is pop off. Say whatever you want. Crisis. Multiple things here to look out for in October. We're going to do more about that on our next report. Please make sure you subscribe. Big report. In our next report, I've got some data. I've kind of compiled all the different risks that we've got coming up in October. So stay tuned for that. Again, make sure you're subscribed. California passes consumer protection bills, medical debt, overdraft fees, unfair subscription practices, right? They're doing more things to keep the over-indebted consumer from defaulting. All these different things, right? So let's see. Let me just give you a couple tidbits out of this article here. One of the assembly people addresses complicated auto renewal subscription services that are easy to sign up for but hard to cancel. I actually agree with that. There's some of those, they make it really easy to sign up, but to cancel, sometimes they want you to send in something in writing, and it's ridiculous. Helping people with their medical debt. Folks, why would we need all these programs if everything was good, if the consumer is as resilient and doing as wonderful as we're being told? It doesn't make any sense, does it? Bankruptcies soar amid inflationary economic pressures. Bankruptcies soar. Small business bankruptcies are up 61% on the year. Folks, that's out of Daily Signal. The data comes from bankruptcy analyst Epic, which reports commercial filings for Chapter 11 bankruptcy soared to 4,553 so far this year. Remember, one of my themes here was things are going to get worse. Things are going to get worse. A lot of people said I was doom and gloom, that I was fear-mongering, that I was wrong, that I was just cherry-picking bad data to try to make things look worse than they are. Folks, I think I've been underreporting. I think I haven't been as bearish as I should have been, not on the stock market, but on the overall cost of living crisis, what I like to call it, folks. It's insane. A couple more things here before we wrap this up here. So we've got a fork in the road ahead of us. One direction is we have global powers that be. They're going to be exercising their abilities to keep you in a level of control and debt, even much worse than it is now. They're going to use the currency. They're going to try to use the currency. Got the other fork in the road that could be returning back to some sanity, to some realness in the financial/monetary system. I think most of you know what I'm talking about, folks. So in other words, keep stacking, right? Those of you that have been on this channel, I've been talking about silver since under $15 several years ago. You've doubled your money on that. You outperformed the housing market right there just in silver. And then gold, that's another one. But I've been mostly stacking silver just because you can get more, and I think it's more undervalued. And I think there's more upside because there's more price suppression in silver because of all the industrial uses. All right. So more price suppression means there's going to be more upside when, and not if, but when the suppression ends, when economic reality is unveiled. All right. Also, it was actually a reminder of our next report. We're going to compile all these things that are coming together in October. The BRICS announcement. Will there be a de-dollarization, overnight dumping of U.S. dollars causing interest rates to spike? Or will it be such a devaluation of the dollar that prices spike, right? Because typically when interest rates spike, prices don't spike because, right, it's stronger for the currency when interest rates spike. But what if we see simultaneous, right? We're going to talk about that. We'll get into that more next episode. Make sure you're here. Keep stacking, everybody. Let me know what you think about this one down in comments. The housing bubble. Would the price declines have been twice as much looking at the number of mortgage forgiveness or mortgage foreclosure preventions that occurred in 2020 versus how many foreclosures we had in 2008? It would have been double in my estimate, guesstimate, or whatever you want to call it. What are your thoughts? Let me know. Have a good day, everybody. Keep stacking. Bye for now. Talk to you very soon. Peace.